Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Hello, everyone, and welcome to our third quarter investor live stream. I'm Heidi Butler. On this live stream, we are joined by Jamison Manwaring, co-founder and CEO of Neighborhood Ventures, and John Kabrowski, co-founder and president of Real Estate. We will be taking questions via the Q&A option at the bottom of your screen, and we will answer all your questions at the end of the presentation. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results, and that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from those contemplated at this time, and prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures. Certain statements such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual result, performance, or achievements to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. We love keeping you updated and educated. Join us on your preferred social media to stay up to date and see the impact we are making in the community. Now, here's a look at our calendar. Distributions will continue to be available on the 10th of each month. Now, over to Jamison.
Thank you, Heidi. And welcome, everybody. Thank you for joining us on this live stream today. We can't thank you enough for your support, your continued support in our projects and everything that we're doing. We just successfully had our 13th project, and we appreciate you being here today to learn more about it. As I mentioned, since our last live stream, we have successfully funded our new project, Venture on 12th Place. We hit our target funding of $1.5 million in less than 4 days with over 200 investors. And we're actually closing on the property and purchasing it this week. This offering has a limited availability before we hit our maximum fundraise, so there's still a little bit open for you. The property is in a great Midtown Phoenix location and has large 2-bedroom units. We're excited to see our team go to work on the renovation in the next few months. The Neighborhood Ventures Fund is also currently available for accredited investors and offers a 12% preferred annual return. The fund invests in each of our projects, so it offers some great diversification, and it is open for investments until the end of this year. This is a closed-end fund, and we expect all of the assets in the fund to be liquidated and investors to receive your principal and returns by the end of 2025, if not sooner. In January of this year, we began paying a 4% annual cash return for the investments in the fund, and we began paying a 5% annual cash return last quarter. We expect cash returns to increase over the remaining 3 years of the fund as the remaining projects begin generating cash flow. We anticipate Venture on Eldon will reach its cash flow stage in Q4 of this year, and Venture on Route 66 and Venture on Route on Central are estimated to begin cash flowing Q2 of next year. We are also excited to show you the great work that has been going on up in Flagstaff at our Eldon open house this weekend. We know it's a bit of a drive, but would invite you to come up north to the cool weather for the day and see the inside of these renovated units at Eldon and enjoy sandwiches from a local eatery, proper meats, and provisions. We will also have our Venture at Route 66 property open for you to view, which is about 10 minutes away from the Eldon property. And although Route 66 is still mid-renovation, you'll be able to get in to see inside a few of the units and get a great feel for this property. Before I pass it over to John, I wanted to take a few minutes to discuss the rapidly changing economic environment and how Neighborhood Ventures projects are positioned to perform well, even as economic conditions tighten. First, our projects are in core areas, meaning they are near employment centers, freeways, and mass transit. Housing in these areas tend to perform better than properties on the outskirts. Second, when we acquire our properties, the rents they are generating are below the market rents of that neighborhood. This gives us room to reposition the property at higher rents when the renovation is complete. Third, because we are buying medium-sized buildings and we have a unique deal pipeline, we have been able to avoid competitive bidding that drives up the purchase price. We have passed on a lot of projects that we thought were overpriced, and we've stayed disciplined to only acquire projects that have a low cost basis relative to value. We are conservative operators. We plan for the worst and hope for the best. And we are well positioned to continue to create value in our projects and generate strong returns for our investors as economic conditions change. Now I will pass it over to John to get his thoughts on the current market conditions and how multifamily is set up to continue to perform well going forward.
Thanks, Jamison. Welcome, guys. Thanks for showing up for another one of our investor talks. Arizona's housing deficit has increased over 1,000% since 2012. It is now ranking number 8 in the nation for this gap. On average, Arizona increases its population by 93,000 people annually due to job growth, propelled by lower cost of living as compared to other states with similar economies. High-tech manufacturing is continuing to grow in Arizona. As an example, LG Energy Solutions is building a battery plant that will create 2,800 jobs and further the demand for housing. On a national level, there is a recurring concern that the economy may enter another recession. Economists at Goldman Sachs believe that the economy will avoid a recession this year, and thanks to the strength of the labor market and the odds of the recession for the next 2 years is only 30 to 50%. Of course, the other impact on our economy has been inflation. This chart shows the consumer price index from the start of 2021 through June of 2022. Though we've experienced inflation of 10% on food and services, you can see the main impact of inflation is energy, which is up nearly 60%. The Federal Reserve Bank of New York said that we could expect slower inflation increases over the long run, with the annual rate 3 years from now of 3.9% and down to 2.8% 5 years from now. Even with these changes, investing in real estate has proven to be a steady hedge against inflation in all states. The growing job market in Phoenix is only continuing to increase the demand for housing and raise market rents to balance out the supply and demand. We have a housing shortage, combined with higher interest rates, which is pricing potential home buyers out of buying and into the rental market. This is going to fuel the trend for rising housing costs and rent increases. Property values for multifamily have grown 45%, and market rents have risen 25% in just the past year alone, which makes even underperforming multifamily properties a strong asset class in a rising interest rate environment. Back to you, Jamison.
All right, thanks, John. So now let's move to our property updates. Each property follows our project life cycle of acquisition, renovation, stabilization, cash flow, and then the ultimate sell. We have the project timeline, which also shows where the property is in the target hold period. So let's first talk about our most recent acquisition. Venture at 12th Place is our latest acquisition. It's located in Midtown Phoenix. As I mentioned, we had over 200 investors already, and we raised $1.7 million in the first few days, surpassing our target. We expect to begin renovations on this property in October, and we're closing and purchasing this property this week. Now, John's going to share some updates on our properties that are currently under renovation.
Interior renovation is underway at Venture on Central. Our teams are updating the bathrooms from a Jack and Jill style into 2 separate bathrooms. We've flipped the access to the washer and dryers from the pantry to the hallway, a more functional upgrade. We've saved the kitchen cabinets and saved costs by refinishing the cabinets. They look absolutely fantastic. We are updating the landscaping for Venture at Route 66, and we'll be painting the interiors a lighter color palette. Our crews will go through adding tile to the kitchen backsplashes, and that's at Venture at Route 66. Refinish the counters, the countertops, and the bathrooms will have updated fixtures to add a sleek style. Venture on Broadway is seeing a lot of big changes. We are in full renovation mode. Our teams are installing utility lines and to provide plumbing and water to the main building. And our general contractor will be turning the project over to the Dunkin' Donuts crew to start their interior work, our last interior work. The last thing you'll see of that project will be the asphalt and the striping and the finish of the drive-through area.
I wanted to just mention one thing, John, with Venture on Central. We already have several tenants who want to move in there who are also investors.
Yeah. So that just, a little sidebar. The fun thing about our projects, we do such a great job on finding them, a great job on planning them, and then the renovations of them. So yes, we have. There's a waiting list right now.
Yeah, and one of our investors is someone who's wants to move in there, and because of where that project's located, so kind of a fun little tidbit. You can invest in it and you can live in it.
It's a great. I love the neighborhood. So anyway, getting back to even the Broadway project, we're excited to see that move along. But we're going to turn everything over to Dunkin' Donuts and their crew, and then they finish their interior work, and the time, and then you'll see the final bits of work we're doing, which is the asphalt and striping, and then the drive-through will be finished. That's our next thing. I want to talk about a little bit about what we do with these projects. When we acquire a new property, the first thing we do is hire a professional management company. We work through our management team to ensure that we provide as much notice as possible to the existing residents, honoring the current leases, and offering assistance in finding alternative housing for residents who choose not to stay at the property after the renovations are completed.
And then to our projects that are stabilizing currently, Venture on Eldon is now moved into our stabilization phase. Renovations are complete. We expect it will begin cash flowing at 6% in the fourth quarter. Units are currently renting for $1,900 per month, and they'll be moving up as we hit our market rate of $2,000 per month as we continue to lease out the property. This is 25% higher than the $1,600 rents that we expected when we purchased the property last year. We also have several properties that are stabilized and generating strong cash flow. Distributions from cash flow are available to investors by the 10th of each month. First, Venture at Mountain View, which has been paying a 6% distribution to investors for quite a while. Mountain View rents are also right now increasing. Just 1 quarter ago, our average rent was $990 per unit. And today our current average rent is $1,150 per unit. We expect to see this continue to increase as 7 units are currently turning over, and the market rent is now $1,350 on average per unit. Venture on Williams is also paying a 6% annual distribution. Williams is at a 95% occupancy. Its current average rent is $1,425 a unit, and the market rent is $1,550 a unit. We expect rents for both properties to be brought up to the market rate as leases renew and are released. Venture on 19th's average rent is $1,060 per unit, and it has an average market rent of $1,430 per unit. The market rates in this area have increased by nearly 20% over the last year. And as we adjust to meet these rates, we are seeing a change in the tenant mix, and we're seeing increased rents. Venture on Country Club has completed renovations in the co-work space, and we have also completed the final interior renovations of the units. So the crew is finally off of this property. This property is currently being operated as a vacation rental, and travel demand remains high for these units. We expect to get the property rezoned as an apartment by the end of this year. Both of these properties are also paying a 6% annual distribution.
All right, so we'll now go ahead and take some questions from our investors. The first question was, where do we head first for the open house, Eldon or Route 66?
That's an easy question. Yeah, so we'll start at Eldon, but you can go to Route 66 first if you'd like. There will be someone there that will have units open from, I think we start at 11 o'clock, I believe.
11 o'clock.
So it goes from 11 to 1. And so you could go to either property first, but the food's going to be at Eldon. So that's probably where most people are going to go.
I'll also point out all investors will get an invitation in their mail later this week that you'll be able to find that invitation and all the information as well. Are there considerations to lower the minimum required investment to participate in the venture fund?
So our current fund is only available to accredited investors today. And the reason is it's quite complicated to do a national fund that's open to everyone. So there is an income limit to participate in the fund right now, and it's a $50,000 minimum. We do hope as we grow that we can open the fund up to more of our investors. It just gets a little bit more complex, and we hope to be ready for that soon.
You mentioned that part of the overall strategy is liquidating the assets. In an economical downturn, it may be harder to dispose of these assets for the price you have in mind. What is the backup strategy, and how do investors benefit from this?
That's a really good question. And it's something we get asked all the time, not only at Neighborhood Ventures, but my other company, ABI Multifamily. I'd say at the moment, with the high inflation, the recent increases in interest rates, and certainly in Phoenix, the hotter weather and a little bit of uncertainty in the economy, we've seen a little bit of cooling of increases in value. We haven't seen the drop in value. We've seen the increase in value kind of temper a bit. My gut feel by September, October, as we begin to understand that the interest rate environment we're in is going to be normal, the gas prices are going to be somewhat normal, and that this is the environment we're going to live with, we're going to see things come back down to a normal investing cycle. So how do we offset that at Neighborhood Ventures? We've got great properties. We've got a lot of our units, as you heard Jamison and I talk about, the rents are still below market. We have nearly zero vacancy in the entire marketplace, and we have a huge demand for housing. So how do we offset that? We continue to run our projects. We put lower interest rate loans on our properties. We refinance them and put a permanent loan on them. So all of our projects, when they transition out of the renovation phase, we go to a stable loan at a lower interest rate, but it also allows us to have between 5 to 7 to or even 10 years of runway on a loan. But we don't anticipate selling into a negative market. We'll end up selling all of our properties in a market that's better for us at the right time. And we spent a lot of time analyzing how do I say it? We work very, very hard to make sure we understand when we think we can sell the properties based on the best market conditions. And I can tell you the one comment that we say in real estate quite often, pigs get fat and hogs get slaughtered. So the idea is we want to be smart about what we're doing, but we don't want to squeeze every last penny out of it. So,
yeah, and the environment that we're in right now, we needed this pullback. Housing was getting out of hand as it continued to increase in price because there wasn't enough supply. So we needed this pullback. We needed these higher interest rates, even though there's some pain right now and a lot of uncertainty. This was an important thing to happen because we needed the market to stabilize. And we're well positioned. We have very low debt. We're under 50% debt per value of our buildings.
Loan to value, correct? Yeah.
And that's something that we believe in. We believe in keeping the debt low, keeping it stable. And then when you have great properties that are operating well, that are generating strong rents, that have good tenants, the properties are just like a small business, and they do good just in and of themselves, independent from whatever's happened economically when it comes to interest rates and values. So to John's point, we'll sell the buildings. We haven't sold any buildings this year because the properties were doing well and they were continuing to drive cash flow. And we sell those buildings once we feel like is the right time. But they're all great assets. So when you do take them to market, they will sell and we'll do very well on them. But the summer is usually not the best time to sell in Arizona.
That's exactly
when you're selling a building.
But we still have real strong appreciation in values. That's the underlying theme here.
Great. Our next question is, what are the property management companies that you're currently using?
Well, we actually have two companies using at the moment. Locally, we're using Sundial Properties, Diana Creason. She does a great job, and her team's very attentive to everything we're doing. And we found that they've been really, really good at what our core property size is. And then in Flagstaff, we have another company called Hope Property Management, and they do a great job in Flagstaff. It takes a long time to build that kind of relationship, so we're happy to have them with us.
Yeah, and I'll say because of John's relationship with those folks, we get a lot of attention from our property managers. They want to make sure that our properties are running well. the rent's being collected, and they've done a great job for us. And that's a key part of this business. You know, if your property manager is not doing their job, it makes everything more difficult. So it's something that I think most days John is in contact with our property management team for a few hours talking.
I do.
Working through issues.
Yeah. And you have to manage your property managers, and not in a bad way, but stay in contact and give them the right guidance and look for feedback. Yeah.
Okay, so I'm going to combine two questions here. Both of them are about Venture on 12th Place. The first one is, it looks like Venture on 12th Place is still open to invest. How much is the max I can invest? And then the second question is, with previous projects being funded in less than 2 days, does that worry you that Venture on 12th Place is still open?
Yeah, good question. We actually had this question last year, and what ends up happening when we were raising for Venture on Country Club, we ended up hitting our target in the first 3 or 4 days on Venture on 12th Place. And what that means is once we hit the target, that's the green light that we've raised enough to go forward with the project. And that was in the first 3 or 4 days. But we keep a little bit available from the target to the max as we talk to new investors, as people who see different marketing that we do, decide to come in and they want to now place an investment. If everything closes out in the first day, then only our current investors get to invest. So we like to keep a little bit available for new investors to come in and be able to place an investment. So we're happy to see that we still have a couple $100,000 left in Venture on 12th Place, but we already hit our target. So it's already a green light. And it does kind of change in the summer. We launched the offering around 4th of July. And I think it was a few days before the 4th of July. And our first project took us 6 months to raise $500,000 from 100 investors. And so to get 200 investors in the first 2 days, is pretty amazing. And all of our investors are in Arizona. These are Arizona residents. So 200 Arizona residents invested in the project in the first couple of days. And it's pretty incredible that we can raise that amount of capital and bring that amount of awareness in the first couple of days right in Arizona.
Yeah.
And how much is what can they invest right now as an investor?
Yeah. So our minimum investment is $1,000, and that is open to most folks. If you're going to be an investor, you can usually put away $1,000 over a couple of months. And I have told people, if you can't afford $1,000, you should probably wait a little while and save a little bit. If you're a high school student or a college student and you can't save $1,000, probably not the time to invest just yet. But once you can get it to $1,000, you can become an investor, which is really incredible, since most investments in apartment buildings like this are $50,000 minimum, $100,000 minimum. So $1,000 is the minimum. If you are an accredited investor, there's no minimum, there's no maximum. But if you are not an accredited investor, which most of us aren't, then you can invest up to $10,000 in each of our projects. It's pretty simple that way. And we have a lot of people who invest $1,000, and we love that. And then we have a lot of people who invest a lot more than that. So we have a great mix of investors.
So then the next question we have here, once I sell my rental home, if I use those profits to invest in your properties, will that qualify as a rollover investment so that I don't have to pay capital gains for my rental home? I
think what that person's asking is if that they can affect the 1031 exchange. And the answer is we can't do that. In order to do that, in order to do a 1031 exchange, an investor would have to take actual title in their name, which means we'd have 200 individual people listed on the property title. I can't even go into the depths of all the issues that creates, both from a risk and liability situation and process problems we have. But the answer is no. But you could put net funds. If you don't do a 1031 exchange, you can put money into it, post-tax money.
Yeah, and in that situation, he or she would have to buy like property, so they could, if they decide to do a 1031 exchange, they're just deferring their capital gains. They're still going to have to pay it at some point, but they're deferring paying that. They have to go buy a like property, and we're not giving any tax advice. But a lot of people are saying right now the taxes are fairly low. There's a lot of indications taxes are probably going to move moving up in the future. And a lot of people are just deciding to pay their capital gains now because you have to pay it at some point. And that's something that folks can look at. But 1031 exchanges can be good sometimes, and sometimes they're not the most effective.
Okay, our next question here. Had lunch at Burger Rush the other day and was surprised to see so little progress on the rest of the center. Do you regret even a little going into retail?
No, no. There's actually a lot more going on there that meets the eye. Most of the stuff's interior, floor cuts, plumbing, electrical, things that are not that obvious. It's going to become very obvious when Duncan's general contractor jumps in and starts finishing things out. And I, again, going to point this out. We have the same supply constraints that the rest of the world has. So as an example, on that project, we can't get our commercial air conditioning units or our electrical panels for another couple of months. So we're going to get all the work done. Property's going to look great, but it's not going to have the final electrical panels or new air conditioning units on it yet because supply chain's so backed up. So I don't regret it at all. It's a great project. It's going to work out really well.
Yeah, and the other important part with that was COVID did delay the entitlements from the city to move forward on by about 6 months without getting into the weeds there. Instead of being able to solve some of the permitting issues with a quick meeting, when COVID happened, a lot of those things in the city shut down. But we planned for that. Things end up always taking longer than what we expect. The great thing as an investor into that project is that the project is cash flowing. So we have one tenant who's in place, and that tenant pays for the mortgage
and the expenses.
It's triple net lease. So there's no out-of-pocket expense, even though we only have one tenant that's in there. So we knew that going in, it made sense. We bought it at a great price. Across the street now, the luxury apartments that weren't there when we built the building, it was a parking lot before, those are now leasing. So a lot of great things are happening in that neighborhood, and it'll be a great project. But with real estate, you have to be a little bit patient. We don't have control over getting things approved through the city. So, we're seeing that on Country Club right now as we rezone that. We do all we can, and real estate is not a get rich quick thing. It's got to be patient and resilient, and that's just part of owning real estate.
Great. Our next question is, how do you ensure that your future pipeline is filled with prospects all the time? Secondly, are you expanding into Tucson or planning to stay with the greater Phoenix area?
Well, it's a lot of work to find projects. It's a lot of work to find projects that are going to be profitable. And one of the other sayings in our business is you make your money when you buy the project, not when you sell it. So we're very careful. And as you can imagine, in the current environment, we're getting a lot of projects put in front of us, and we're only buying the ones that can make sense, ones that our construction crew has time to work on, and ones that we feel are going to provide the cash flow and the back end renovation bump that we need to make sense of the projects. So a lot of work to try to find those projects. As far as other markets, Phoenix has done very, very well for us, and we've been very lucky to find good projects. The metropolitan Phoenix area, Flagstaff's incredible. I say that so much that I've noticed that there's some groups out there now shadowing us and buying other projects in Flagstaff, some of the bigger ones that we didn't know we were going to market. We'd love to have bought them ourselves, but that's a great market because of the limited supply and the return we get for the renovations we do to them. Tucson's not a bad market either, but in general, Tucson hasn't experienced the appreciation that we're seeing in the Phoenix market. So that's one reason why we've looked at projects down there, but haven't really dipped our toe into the market because we just can't make the metrics work on that in Tucson right now.
Yeah, and one thing with the deal pipeline, the guy sitting next to me, when you drive around the city, he points out the buildings that he has sold, sometimes multiple times, and he just has a vast network of 30 years here in Phoenix. So when folks go to sell their building, he gets a phone call frequently. Just to compare that, I had a friend who wanted to buy a 10 to 15 unit building in Phoenix, and he started talking with some brokers, and it's very hard for some newbie who has a little bit of cash to go find a great deal on a building. They usually don't get the great deals. They get the deals that are out there to everybody. Most of our deals are off market because of John's network. So this is a benefit that we pass along to all of our investors, because Venture on 12th Place, for example, was a building John had sold prior. So we knew what it was. We knew what was good about it, what needed work. We have a really unique deal pipeline. And so that positions us really well to keep finding these deals.
Maybe one or two more.
Yeah, we're just down to the last few here.
Okay.
The next question is, can we invest with our trust rather than just as an individual?
Well, Heidi can probably answer that one because she deals with that question a lot. So
so you're able to invest as an LLC, if you own the LLC, as a trust or as an individual, or through your IRA if it's self-directed. Those are the 4 methods that people are available to invest in right now.
Yeah, and you can, using your IRA is a great way to invest. You can self-direct your IRA to invest in stuff like real estate, like what we do. You can even buy your own real estate if you want with your IRA. And a lot of people have taken their money out of the market, right now, and not advising that. But if you want to put some funds into real estate, you can do that through your retirement account. That's important to remember. A lot of our investors do that. And then all of the gains that you get are deferred because it's a retirement account.
And a great resource for more information about that is our Kiss My Assets podcast. We have quite a few episodes about different types of investing and investing through your IRA. These 2 kind of questions we're going to just put together. Will it be possible to use your distributions to invest in upcoming properties in the future? And then also with that, with so many investment companies moving toward auto invest features, are we planning on being able to offer these on our platform?
Well, whoever is asking this question, they must know what we're working on right now. So we're working on all those things because we've had that request from investors over the last year or so, and so it is in process. That's what I would say. One of the great things is if you start getting distributions, instead of having those distributions go into your personal account, you could just roll those in and get the benefit of compound interest. So we're working on that right now, and hopefully that's something that we'll have, I'll say, by the end of the year.
Great. So that kind of covers the main questions. We have a few repeats. I would also recommend anyone who has any more questions, feel free to reach out to us via our phone number or support@neighborhood.ventures for any more questions.
Thank you.
Thank you, everybody. Appreciate you taking the time to watch us talk about this stuff. Thanks.
Thank you.